Good morning, Topstep team, fellow futures family. It's time for the market prep. It is Tuesday, July the 11th. My name is John Hoagland. As always, thanks for trusting me with your time this morning. Or we are always going to be focusing on seeking accurate context, which sometimes is challenging. Always thinking about risk management first and always remaining patient in our trading this morning. So, looking at the calendar, there's no major economic releases today. A very quiet economic calendar. Don't forget, we have the CPI numbers tomorrow, as well as crude oil and beige book, all of those tomorrow. So, a quiet day as far as economic releases are concerned today. At 8 o'clock on the schedule, I see one of the talking Feds, Bullard, is due to speak after a number of talking Feds yesterday. U.S. stock index futures trading kind of mostly higher this morning, awaiting Wednesday's CPI numbers, as mentioned, and digesting Fed policymakers' comments on Monday. Those comments, while suggesting a couple of more rate hikes, had hints of ending the rate hiking period. So I think the markets are appreciating some of that. Of course, the U.S. dollar has sunk to 2-month lows after those comments made by those talking Feds. Crude prices remain largely flat. And for all of you home shoppers, it's Amazon Prime Day. The next 2 days, slashing prices to entice consumers. A move followed by a number of other retailers, including Best Buy and Walmart. Interesting note here. I don't know if this is true. I took this off of Twitter, so you can take it with a grain of salt. But for the telephone to reach 100 million users, it took 75 years. The mobile phone to reach 100 million users, 16 years. Twitter, it took 5 years to reach 100 million viewers, and Thread, 5 days. It's amazing how fast information goes. This is just scary to me how fast everything is going. I'm an older guy, and these things frighten and confuse me, kind of like a caveman. The VIX this morning is a little bit lower than yesterday, but higher on the day. 1492. Isn't that the year that Columbus sailed the ocean blue? VIX yesterday was 1531, so a little bit lower than it was yesterday at this time. Dollar index down below 102 now at 101.9, whereas 102.5 yesterday. And the yield on the 10-year has slipped back down below 4% this morning. 398 last I checked, where it was 408% yesterday. Make sure that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. It's always a pleasure to see everyone this morning. And this morning, Scott saw and he conquered. First one in the room. Glad to see you with us here, Scott. Josiah, good morning. Duke, Theo, good morning. Orion, haven't seen you in a while. It's good to see you back. Rooster, yeah, we got the prep today. Think should be going right. Oh, I see. Yeah, because it said make Hoag money. Yeah, no, we're doing the prep and then pretty much going straight into make Hoag money. Pretty much only on YouTube now. We have a very special guest for Make Hoag Money this morning. It should be a lot of fun. Good morning, Dan Trader. No gremlins, hopefully. George, good morning. And Lacey, the center of the universe, also says good morning to everybody. Shaw, good morning. Dan Trader, yes, Mr. Patak is on this morning. You got me. You got me. Morning, guys. Makito, good morning, Matthew, Michael, Bill Phillips, Chaz Dog, the Rooster again, James Hanson, Jim Z, good morning. Hopefully everybody's doing well. You're over in Europe. Thanks for joining us this morning. Nasdaq, Haggle Matters, Dan Trader, Gian, Caprice, Ryan, Roberts. Travis, good morning. Dr. VJ, Chris, Will, good morning. James, Anthony, Sarah Hall, prayers and love as always to you this morning. Trading Research, Grounds Hero, Vincent, my guy, it's good to see you this morning. Rusty Golfer, my spirit animals with us this morning. Mark O, Alejandro, I got lost again. JT, good morning to you. And Bluebell, Jason, good morning. James Hanson, I am not aware of any issues that people are having on Quant Tower. Sean, good morning. Um, Trading Research, although it's like trying to turn a massive ship around, I'm trying to cut back on all news, true crime shows, crises, and get back to life when I was a boy in the 70s. Stuff was going on then too. Yes, it was, but it seems like everything happens so fast these days, right? Trading Research. Casey, good morning. Spencer, Sam, Steven, good morning. David, Wheelstrat, Joe, good morning. Best advice for trading combine day one: trade small, stay patient, take your time, and always be developing your process. Make sure you do your homework. Nikos, good morning. James, Amateur Genius, good morning. Rob, Zach, Alfred, Elliot, James, Jared, good to see everybody. James, good morning. Another James here. Good morning. Yes, Dan, Don, video is good. Good. Will Strat Joe. All right. So, uh, Tuesday, not a lot of economic releases. Knowing that the CPI numbers are coming out tomorrow, um, I say it probably too much. Let's all remain very patient in our trading today. We've got the equities are a little bit higher, still kind of range bound. A lot of these markets, the 10-year coming off weekly kickoff low. We've got the old coming off weekly kickoff low or last week's low, still largely range bound up against last week's or this week's kickoff high. We're going to take a look at all of this in the charts, just trying to make sure that I have taken care of all the business that we're going to take care of before getting to the charts, and I think we have. Let's take a good look. Yes, I have the the right mic on. Let me double check. Yep, it should be good. Should be good. Does it sound weak or something? Is the audio okay? Mhm. Audio is good. Good to go. Good to go. Hey, Rick, good morning. Love you. It's good to see you. Mike is fine. Mike is good. Fine here. All right. I think we're in good shape. Yeah, I had the right mic on today. Okay. So why don't we jump into our charts? I see we've already done that. Here we go. Let's take a look at the E-mini S&Ps. Um, where are we here? Okay. So when I'm thinking about the auction process and how it ends, auctions usually end in excess, where price gets too cheap and is assumed that it's too cheap, and buyers take over, sellers back off, and we leave buying tails. And what we see here on this daily chart is a long shadow at the bottom of this bar, indicating that price may be viewed as too cheap here, and buyers came in and brought price back up. Now, one of the things I look at is volume. Well, the volume wasn't all that great yesterday, but what does impress me a little bit is the fact that we added 5,800 in open interest on a day that looked lower and closed higher with excess at the bottom. So, while I still believe in short time frame slash medium time frame, we're largely range bound. We're seeing evidence that this area down here has been viewed as too cheap. So that open interest increase off that low encourages me to start thinking maybe it's time to start looking for opportunities when this market is exhibiting weakness. Again, the market is largely range bound and seeking new information, which it may get tomorrow with the CPI number and some of the other numbers that are due out this week. So we've got CPI tomorrow, we've got PPI on Thursday, Michigan consumer sentiment on Friday. There's some things that could throw a wrench into any of our plans at any time. So as we always say, anything can happen. ACH. Taking a look at the 30-minute chart now. Overnight inventory. Is there any? Yes. Overnight inventory is long. We started the neo evening here. We're now trading higher. So with the lack of volume, we can assume that the shorter time frame, weaker hands traders are coming into the open, expecting to see new business to the upside, longer time frame, bigger participants continue to push price higher. So we're going to be opening with a gap. We have gap rules. Okay. So gap rules basically state when we open with a gap that's outside the previous day's regular trading hour range and we can't close that gap, we look for opportunities to go in that direction. Now, there were a few things yesterday and a couple of things on Friday that are kind of suggesting that that move to the upside is likely. We had an assumed late spike here on Friday to the downside. The market opened lower and immediately rejected and started reaccepting value from Friday. We never did finish the value area special situation play yesterday, but it looks like the market is well on its way to doing it today. So we rejected the late spike. We have excess on the low on the daily chart. We're going to be opening with a gap to the upside. And Friday's high was a weak high. There was no evidence of short time frame excess at the top of the profile from Friday. So there's a few nuances, tea leaves, chicken bones, whatever it is that you're using that are suggesting that this downside move may be over and a new upside auction within a longer time frame, medium time frame balance may be beginning. We're starting to see higher highs and higher lows. Take a look at the TPO chart from yesterday. Normal variation, neutral stance, very wide profile, not a lot of movement, but some pretty decent um, facilitation of trade in a very small area. Looking here at the New York Stock Exchange volume, and it was pretty low. I mean, we're talking 3.4 billion contract shares traded, which is pretty feeble. It was pretty feeble in futures as well. There wasn't a whole lot of participation yesterday, but the fact that we did add that open interest off this low is encouraging, I think, for traders looking for the market to move to the upside. So there's that late spike we rejected immediately. We have had plenty of opportunity to reaccept Friday's area of value. That area of value is pretty close to our overnight high, and we have a weak low, and we have a prominent point of control above that. So, as we say, anything can happen. Just looking at the nuances here, with the excess on the daily, with the excess on this profile, with the rejection of the late spike, with the weak high and the naked point of control above, prominent naked point of control above, the gap rules hold even more water now. So the gap rules, we're going to be opening with pretty good probability above yesterday's range. If we can't come back in and reaccept range and or value from yesterday, the move is to look for opportunities on weakness to see this market continue a move to the upside. We'll be watching that together on Hoag Money right after the prep today. We've got our special guest coming in, and we're going to see what we can figure out, see what we can find, see what we can do to make money. Now, remember, this make Hoag Money is always for educational purposes only. We're not suggesting anybody take these trades. We'll probably be trading on one of my accounts. So, we're going to take the risk. You guys are going to help us by suggesting ideas and maybe even voting on some of these trades. And we're going to have a little fun this morning. All right. Enough about that. Let's take a look at crude oil, which just opened up. All right. So, uh, it's in rollover. So volume and open interest are going to be very blurry. We lost 12,000 in open interest. And it could be a correct assumption that we just had some long liquidation yesterday. We had some longs coming in, not liking what they were seeing over the weekend and liquidating some of those positions. Volume was lower, open interest was lower, but again, it's blurry because it's rollover. Our longer time frame participants are increasingly interested in getting their rollover done cheaply or making money on it than they're worried about any directional activity. And they will get pushed into directional activity should something happen. So last week's high, resistant yesterday, resistant last night, that can be a function partially of rollover because the longer time frame isn't interested in continuation. They're interested in range bound markets for the next week and a half because I think it's next Thursday that the August contract expires. So until that happens, and it's such a pain because crude and natural gas roll every month, we have to remember that what we're seeing in the kind of auction fundamentals is not to be trusted. We can't really see what's going on because of the rollover. So far today, we're in an inside extended trading hour range. Here's the 30-minute chart. Whoops, here it is. Overnight inventory was maybe a little bit long, but we really haven't moved value from yesterday, right? We've got the day here, we've got long liquidation. The market has kind of gotten a little bit long in the overnight. We're starting to see some participation, maybe moving this market to the upside. And uh, the um, last week's high, this pink line right here, that's last week's extended trading hour high was resistant yesterday. Could it be resistant again today? We've got a ways to go before I think we're going to break any longer time frame structure to the upside with weekly kickoff high up here at 75.70. So we'll see what the market looks like here at the last week's high, where we found yesterday the market to be too expensive, and then the long liquidation started to come in. Let's see what happens there today. We may come back and revisit this at the end of the prep here. So normal variation trading day, maybe a little bit extreme because we've got our points of control well above the halfway mark, which is this line right here. Possible repair. I mean, it's not a true double distribution trend day. The thing that sticks out to me most about this profile is the anomalies that were left. There's a true anomaly here, anomalies here. This is not a confident market, really, in any direction. Confident markets don't leave markers like these points of control. So, unless something changes, opening in range and in value has me thinking about looking for better trade locations as the day goes on. Take a look at the Nasdaq now. Nasdaq took a nice look down to weekly kickoff low. That is a almost a direct hit. I love it when a plan comes together. Unfortunately, I don't trade the Nasdaq. Weekly kickoff low proves too cheap. Again, we see excess on the daily chart with this long shadow indicating price got too cheap. Sellers wouldn't sell it. Buyers took over. And that is supported by an increase in open interest of approximately 6,200 contracts. So actually, volume on the Nasdaq was better. Orion, I don't trade the Nasdaq because it's too fast and it gives me heart palpitations. Like Rooster says, I end up with PTSD when I trade the Nasdaq. But the market gave us a good look down to that level, rejected it, added open interest in volume. Um, then, actually closed relatively well. What other information do I have here? The market is still kind of in a short time frame balance area. Both the S&Ps, the Nasdaq, and Dow, probably even the Russell, are looking for new information. Maybe it's going to get some of that tomorrow. We do know that tomorrow is the beige book, and that's 2 weeks to the next Fed meeting, where, of course, we'll probably be seeing a rate hike. I think the market has kind of priced that in, but we never know. Anyways, here's the 30-minute chart. Overnight inventory, slightly long, less of a probability of opening with a gap, but this market didn't present as strong yesterday. It tested down to weekly kickoff low and found rejection there. But it never really accepted back inside the value from Friday. So the Nasdaq is struggling a little bit more than the S&Ps to move higher. But again, if we do have a gap and we can't close the gap, maybe we close the gap, trade to the high from yesterday, and possibly find support. I don't think that the overnight inventory is excessively long. It seems to be kind of reconciling already this morning. So we've got, a point of control here that I think we got to in the S&Ps yesterday, another one up here, and there's that same week low from Friday in the Nasdaq. Now this is 4 tick TPOs, I believe, so this may not be a precise week high, but the market did have the gumption to trade back to this high before sellers came in and took this market lower. So it's kind of telling us that that's an unfinished upside auction because there is no excess. Remember where auction processes die? They die in excess. We have an excess low yesterday, normal variation, neutral stance. These days tend to push price away from them as price looks for areas to increase participation or facilitation of trade, but price generally comes back to prominent, in other words, very wide points of control. Case in point, yesterday's low. Prominent point of control, price pushed away from it, came back to it as a check of that comfortable level. Remember, points of control are comfy levels where a lot of trading has occurred, a lot of eyeballs go to them. And when traders are looking at a visual level, they have a tendency to eventually make price go there. So we had our test of that prominent point of control yesterday, leaving excess at the low, possibly opening with a gap. Really not necessarily accepting back in value from yesterday with this assumed late spike. The acceptance was lower in the Nasdaq yesterday. We're going to have to see how that plays out for us today. Yesterday in the Nasdaq and the S&Ps, there was a lot of conflicting information. Speaking of information, we've got our gold contract here. Overnight, we traded buck. What's weekly kickoff high? 1943. We got the 44 and a half, 15 ticks above it. Sure looks good on this daily chart, though, right? Range bound activity. That's what it's been. Yesterday, off this low, volume was really weak. It's starting to look like the rollover into the December contract is beginning, but it doesn't come for a while yet. We did add 20,000 in open interest on this indecisive day. Somebody came in and made a decision in gold yesterday with that increase in open interest. So the volume was weak. Open interest increasing. That's that's substantially a lot for gold, 20,000 open interest. I don't think that that's necessarily a function of rollover yet, but price too cheap. We got a very indecisive. The market continuing to try and press up against this weekly kickoff high. So, what are we thinking about gold today? We're thinking range bound rules. Range bound rules have us fading extremes, fading the weekly kickoff high. In other words, selling against it because it lets us limit risk, buying against the weekly kickoff low or perhaps even last week's low. What's in play right now, what's in play today is the weekly kickoff high. So range bound, we can sell, we can sell, we can sell, we can sell, and be able to limit our risk. The rotation is from low to high to this low to this high. If that doesn't hold, the move could or might be all the way back down to last week's low or weekly kickoff low. It's range bound rules, breakout rules. If we find acceptance outside of the current range, in other words, we get up here, we start to see volume, participation, um, momentum, time up above this level, that may be marking the acceptance of higher pricing, and that's something we'd have to go with. Okay, so overnight inventory is long. Overnight, we tested to an important inflection level, and we failed to to kind of continue above that level. Well, this is what range bound markets do. They get up here, they look, they fail, they turn around and head the other direction. The market's opened. It opened with a gap. We saw that we had probably had some new buying coming in yesterday. If that new buying is a longer time frame, they're going to protect that level. We're seeing a pullback, a reconciliation of overnight inventory. But if we can't close the gap, you've got two spots with which to look for opportunities. Wherever the market fails to close the gap to the downside, or if the market looks at weekly kickoff high. If it stops short, you can limit risk. If it goes through, it's a little bit of a tougher trade because the market can come through, come back, come through, come back, and then finally go. So be cautious, be careful, try not to get chopped up. Once in a while, these weekly kickoff levels become a little bit magnetic, which is a pain in the butt because all it does is chop you up. But there should be some potential opportunity up against this level. And if we can't close the gap, even if we do close the gap, this value high could end up being supportive. It's going to even out the inventory, and if buyers are still present, that's an interesting spot for them to begin to get involved again. Here's the euro with the dollar um, on its heels a little bit here. We've had a pretty decent 3-day rally. And we're continuing to increase open interest on this move. So we got, 3 days. We had the breakout that day, the continuation. We're getting a deeper pullback with the amount of open interest that's come in this period of time. I would say the market is doing an okay job on this short term trend, but volume is cutting off. So I'm giving the last 3 days in the euro a C. It's just doing okay. It's better than most of my grades, but still just doing okay. Um, the volume that has slowed since the breakout of this move is I think what's really kind of irking me about this. It's still range bound. We looked above the high here. This is kind of the June 22nd swing high, which was excess. Well, we're showing excess back at that same level now. Wouldn't surprise me to see some sort of a pullback because we have come a ways range bound, really, but in a trend to the upside that's part of that longer time frame range. Take a look at the 30-minute chart. So overnight inventory was long. It has reconciled. It has taken us back into value and back into range. It has tested to last week's high. interesting level. It was too expensive. We broke out above it yesterday. The move back to it gives us an opportunity. So can't forget that even though I'm giving the auction process a C, it may not be over and looking for opportunities to buy weakness. And certainly I would think about this last week's high as a weakness that I would think about buying because why? It lets me limit risk. Everything I do, I think about risk first. Risk first. If my stop has to be down here, I'm going to demand good trade location to even get into the trade. Here's the TPO chart. So we did actually put up a late spike yesterday. It's a very short late spike. We've opened below the late spike. Okay, the base of the late spike is 1.1036 and a half ticks. There's the base of the late spike. What are the spike rules? Opening in or above a late spike to the upside indicates acceptance of higher pricing. Opening below the base of a late spike indicates rejection of higher pricing. So be cautious around that last week's high. And stay, I think patience is the way to go. We're in range and value from yesterday. Better trade locations are likely to come as the day goes on. All right, here's the 10-year. We saw a pretty decent breakout move. We saw volume start to cut off yesterday, low volume, and we lost 2,400 in open interest. So there's an indication with the low volume, the loss in open interest of some short covering. What does it look like on the 30-minute chart? That short covering, okay, kind of brings somewhat of a P shape, which is a short covering shape of a profile. And well, the market has traded in the overnight to a naked point of control. We've now taken out this gap in regular trading hours. So I'll be moving that away. And the overnight inventory being too long has taken us to a gap close. This gap close can mean one of two things. It can be supportive, and if we do find acceptance inside value from yesterday, that's the value area special situation play, which could bring price all the way to the other extreme of value at some point in the session. What this is starting to look like to me is a bear flag. We've got a long way to go before we're going to break out of that bear flag. And look at the 1, 2, 3 perfect points of contact on these lows. This trend line, if approached, could be a powerful opportunity. Right. This is the profiles from the 10-year. Excess, excess, excess. Kind of a weak high. Kind of a weak high. Still kind of holding that bear flag formation. While we're in that channel, I'll be using those trend lines for opportunities to limit risk. But again, we've kind of opened out of range, out of value. If we start to show acceptance inside value, the value area special situation play does come into light here and is a possibility. Let's take a look quickly here at the natural gas because we just have been. It's a habit balance. We did see some short covering on some pretty decent volume off that low yesterday. We lost 3,400 in open interest. The market really coming into balance, and it is kind of heading into um, the um, the rollover. It's about a week after crude oil, but still coming into rollover. Take a look at the 30-minute chart. Very narrow narrow range yesterday for a loss of that open interest. Last week's low below, last week's high above. Anything can happen in here. It's really kind of range bound. We can see that overnight inventory was long. That's now been largely reconciled. The market can now do what it's going to do. Here's the TPO chart, normal variation, neutral day. A little low extreme here at the bottom, low extreme here at the top. Um, not seeing great excess on either any of these highs or lows. Market seems relatively content just to kind of hang around and finish rollover. So that is our look at these markets, and I'm not sure what we're going to do here. In my I'm going to just do what I usually do. Let's have a good trade. Yes, right now. Okay, okay, okay. Traders, let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Get out there and profit, and make sure you stick around and join us for Make Hoag Money with Michael Patak. It's going to be a fun one. Ah, Mr. Patak will be here in just a few seconds. Put this Mr. Patak.
Johnny, how
How you
are we?
doing? Doing good.
I'm just getting in the saddle right now. You got me all loud and clear?
Yeah, we start pretty early around here.
Yeah, I know. Chicago's traffic starts even earlier,
Oh my goodness. Yeah, forget about that.
right?
I do not miss that. Yep.
Jack, do you have any low background music we can put in? Just to get a feel. Yeah. Yep.
All right. Welcome to Make Hoag Money, everyone. I am so excited to have founder Michael Patak here with us this morning for Make Hoag Money. It's going to be an interesting and fun one. Usually we start out with a little bit of business, and we should probably talk about the CFTC disclaimer. There's a lot of risk in futures. And because these are leveraged products, I mean, you can lose more than you have in your account. Risk capital to me is money that I can afford to lose. But that's what we love about Topstep. You're not going to have to put the risk capital up. We're going to put that up for you. So you don't have to assume that risk. And everything we do here on Make Hoag Money is for educational purposes only. We're not suggesting that anybody else purchase or sell any other product or security. And again, there is no past performance that is indicative of future results. So let's get rid of this and get down to business. How are you doing, Mike?
I'm doing great. I got a little Chicago traffic going on where it kept me from getting here and fully preparing, which is already my first mistake. I am not fully prepared.
Okay,
Even though I got
well,
a little bit of the morning about 2 hours ago that I was checking, I have not seen too much from the last 2 hours.
I've
So
got us fully prepared.
I know. I saw the trail, the prep, and I definitely need the prep, and so hopefully everybody on the prep got prepared enough. And I'm excited to jump in here with you, Hoag. Thanks for having me.
I've been looking forward to this day for years, and it's here. I feel like
It
it's
is.
Christmas.
It feels like it's a holiday, one of the holidays.
All right. So just to kind of recap where we are as far as context is concerned, we're going to be opening here very shortly. Market is largely range bound and seeking new information. It took a look below last week's low yesterday. If you remember, Michael, we were talking about the possibility for a value area special situation play, which didn't finish yesterday, but looks like it might finish today.
Mhm.
Here's the 30-minute chart. So here's where, let me make this over here so we can all see everything. There we go. So here's Friday's range. Here's yesterday's range. We opened with a gap and drove right back into the range from Friday. There was a small late spike on Friday, or an assumed late spike, but we kind of showed acceptance back inside of value from Friday. So that says to me, the probabilities are that we're going to get back to the upper extreme of the area of value on Friday, which is right up here. We weren't able to do it yesterday. We had a good move at the end of the day towards that level, but look what the overnight has done. It's gotten us closer to it. We're opening with a gap. Gap rules would say we're looking for opportunities. If the market doesn't close the gap early, we're looking for opportunities for longs, which would continue our potential move to value high from Friday, which also had a very weak high. So we're starting.
That's Friday right there, Johnny, and then you got the next volume profile is yesterday.
This is yesterday,
and then this is overnight. Right after this,
overnight.
Yep.
But we're going to think about, we had this low, higher low, higher low, higher high, higher high, higher high. So the market's changed a little bit.
What time do we got at the low of the day?
From the overnight?
Yeah, we're right there.
That was 3:30 this morning, Central Time.
Is that the East or not the ECB? What was that? What came out?
Well, the 2 o'clock. And well, ECB, there was a speaker. There was nothing necessarily. I mean, German CPI came out. That was their final. It came out as expected. It wasn't anything terrible. Unemployment change in the UK was a little bit higher than expected. Their unemployment rate, went from 3.8 to 4%. So their unemployment rate jumped a little bit. That may have a little something to do with it.
All righty. We have the Nasdaq pulling back pretty hard back to settlement. We like the settlement retracements. You see those quite a bit where the markets trace back to settlement, right, Johnny? You see that?
Yes, that's we call that an overnight inventory adjustment. 44.
Overnight inventory adjustment is in the play for the Nasdaq. S&P is a little stronger today, but they are both up. And you know how yesterday we were talking about being inverted or opposite day.
Yeah, they were headed opposite directions, right?
Yeah.
So there's settlement for the S&P. I'm going to put a Nasdaq 30-minute on here because you are a Nasdaq guy.
I'm a both guy. I just like to trade with a lot of the folks here at Topstep trade, and that's for me to have a better conversation about it. I have a 10 tick stop or 10 handle. Sorry, 10 handle stop. And those that don't know, 4 ticks is a handle, quarter, half, 75, even. And then I have a 17 handle
target.
Call it 1.7 to 1.
It's good. You always want that reward over risk to be skewed in your favor.
Yes, sir. Yes, sir. Risking 200 to make 240.
So are you in the market now?
I'm not in the market now. I'm letting the market digest the open. I always like to let the market digest the open. What does that mean? A lot of orders come in right at the open, and some big players play the open. It doesn't have the typical movements that I like, because a lot of new information or new positions, call it bigger institutions, come out in the morning. So I like to watch this first 15 minutes. Doesn't mean I don't play it, but today I'm not seeing anything coming back to settlement on the Nasdaq.
All right.
Quarter. What do we come down to? 82.5 is the low ish. What is that? I work in ishes, not exactly.
Of course, there's nothing precise in trading, right?
There are days that we can carve up the market, and then we feel like we got it on a dime every turn. But
look out for the day after that.
Yeah, I know, right? So I'm watching a 30-minute. You got your 30-minute up too, John? I got my eyes on mine right now. Okay.
Yep.
Why do we like the 30? Why do you like the 30-minute?
Because it lines up with the market profile.
Okay.
The market profile is based on 30-minute time brackets. And it just makes sense to kind of stay congruent that way. Now, the Nasdaq is showing that it has already closed this gap. The S&P is not closing the gap, and it has left the opening range at the low of the session.
Okay, so yesterday this happened where the Nasdaq sold off, and right out the gate, the S&P stayed strong.
Yes.
And we're seeing that so far. And thank you. Little background elevator.
All right, we're going to bring in a little bit of soothing sounds of the 70s. No, we're going to bring in some soothing music to kind of go in the background of the things that we're talking about doing here. Too Humble has sent his regards to you, Michael. A lot of folks saying good morning.
Good morning, everybody. It is 3 minutes into the morning of trading. We do not rush here as a Topstep trader, or any smart trader shouldn't. Now, definitely S&P staying stronger. Nasdaq, of course, touched settlement, now bounced off of it. I think the low of settlement again was back to 83-ish, and that's 15,183.
Let's put that on there. 15,187 is settlement.
We have a lot of lows around there. You got the 83s. I mean, you can go back to 2:30 in the morning, 2 in the morning, 3 in the morning, all the way back to 9, 8, 7 at night. Bounced off that settlement. S&P staying stronger. S&P's definitely doing what it did yesterday, staying strong, and it eventually pulled up the Nasdaq yesterday, if you recall.
Yeah, it did. The Nasdaq, got pretty deep yesterday, kind of below last week's low, which I believe is here. I still have to put some of that stuff on this platform. Because I changed it yesterday.
Those that are looking at Johnny's charts, I'm going to get short one in this area. I do like the high. It's coming to the high of the range on the S&P. It's coming to, not the high of a range of the Nasdaq, the last 30. I'm looking at the last 30 minutes going back.
Yeah, you got your overnight high right above here in the Nasdaq.
Yeah, so I'm going to throw a short on right here. Ooh, volume greater. I had a volume of 0.
We've taken out the overnight high in the S&Ps. Well, right to it, actually.
All right. I'm short from 15 to 24.75. I got a 10-tick stop, risking 200. I like this because it's the high of the range, and the Nasdaq has been weaker. Yesterday, the S&P was stronger. This is just a light trade, one lot. I'm short from 24.75. It's dancing around this. If it starts going above 24.75, I'm not going to like it too much because I think it grows legs. And when it grows legs, even though the S&P is pulling back, And you always got to understand what your stops are for the day, because volatility does move things around. So you're either looking for better entries or you widen up your stops a bit. I look for better entries. Why? Because that helps you stay patient. And we always got to stay patient. There's so many opportunities throughout the day. Now, it stayed above my 15-2 quarter, 15-2, 24.75. It's short one lot, so I can get stopped out at 34.
Here.
And we know I'm not liking this too much just because it's staying above it and staying strong.
Well, I took a long here because the opening range is the low of the session and it hasn't been able to get down below it.
Mm-hmm.
We've also created a gap in the S&P in the Nasdaq, so inability to close that gap relatively early also has been looking for longs.
Okay.
This is just one micro, just throwing it on there just to see what happens.
Yeah, it is very. I call it putting the stick in the sand to know which way the tide is moving.
You gotta stick your finger in and then see which way the wind is blowing, right?
Mm-hmm. All right, we're growing some legs here.
Well, and that overnight high can be, so it's actually something we discussed in group coaching yesterday. There was a question from Greg who was asking, how do we take advantage of like overnight highs and overnight lows during the regular trading hour session? And they're really two of the only levels that I focus on from overnight information is the overnight high and the overnight low. It's been established by shorter time frame traders what's considered too expensive and what's considered too cheap.
Mm-hmm.
We're up against the overnight high here in the S&Ps now, but we've also got a gap. We've also got the opening range, which is dead low of the day, and that's what allows me to limit the risk. If we take out that low of the opening range, then things may have changed. Things may not be working out the way I was thinking that they were going to. So we have 5 points of risk, and if we do see this market grow legs to the upside, in the S&Ps, I'm looking for a finish of value area special situation high, which puts us up to 46.61, which is 44.61, which is not necessarily 2 to 1, or I think it's a little bit better than 1 to 1, but we'll see what happens. Here's that overnight high in the S&Ps. We've tested it twice. We're having a hard time getting through it. Take a look at it on the profile here. This is the S&P with the overnight.
A lot of dancing around my entry right here. Here's what I don't like about dancing too much, because I like to have the trade play out pretty quickly. If you got a good entry, it should play out and getting the money fairly quickly, and it's not doing that right now. I'm letting this one play out, but here's my concern real quick. I have a stop at 34, 15.234, and 15.239 was the old high. I see a lot of these head fakes where it's 15.239. That was the old little high here what was that at? 7:30 this morning ish. No, 7:30. Yeah, and sometimes it does this little poke out head fake.
Yep.
Everybody thinks it's a breakout. And then now it is pulling back, which is nice. I'm at 300, 250. It did come off. I have a 30-minute. It came off the 200. I liked it because it was the top of the range. I just got filled. So I got 340 on that one.
Nice.
Sold 24s and bought 07s. Covered. Here you might see a complete fallout or timber, I might call it. Yeah, it was dancing up there, the 24s. We just pulled back. There's 20 handles you could have got into this right now. Well, 94s. There's 20 handles. That's $400. Right. $400 on a one lot. So anybody says like, "Hey, I need to trade 15," you trade one. Show me trade small before you trade big. If you can't trade small, you can't trade big. Yeah.
Right. Folks are telling you it's a very nice trade.
Oh, thank you. You did see the S&P on that move, though, poke out of the high of the range. Here's why I liked it. It's range bound. So far, it's range bound. Your generation, Johnny, taught me to do range bound trading more than breakout. I used to watch you guys trade, and I'm saying your generation because you guys are about 10, 15, 20 years ahead of me in the trading game.
Easy now.
Yeah, well, here's your sell-off, and it's now at the bottom of this range. Like, look at the Nasdaq, look at the 30-minute. Now it's breaking through settlement. Now it came off the 2, and there's your sell-off. There's your timber.
Yeah.
Why did I get out with 10 ticks? Oh, Michael, you could have had a lot more. It's trading down at 15,170s. Now it's making new lows. Now it's 65s. Well, because in the start of the day, I like to build a cushion, and I don't get this FOMO that I'm like, oh, I missed a trade. Now, there could be another trade setting up that I should be looking at and not talking. So let me check that out.
So here's a perfect example of why I focus on the extreme of the overnight. The S&Ps took a look above it.
Yeah, they did. Yep,
But
they poked. They just poked above it. Yep.
They couldn't hold it. So I should have been technically out of that long and maybe looking for a short because the market couldn't maintain price above the overnight session. It was shown to be too expensive already.
Yeah. And I think it came up to 33.5, 15,230.5. And those that listen, I was 15,224 quarters. No, so at the orders. At the orders means 75. Those are going to hear. It's a pit term. At the orders is 0.75, right, Johnny?
Yep.
Okay. So quarter.
Yeah, that's an old grain term.
It's an old grain term. So you're going to hear us use some of the floor terms. But the it came one tick away from my stop. Now, if somebody would be like, oh, it just came up to my stop and it hit it. What is like you know where my stops are at? No, your entry needs to be better. My entry should have been a little bit better. I should have been a little bit more patient. Maybe got 29s, maybe got 30s. If I have a 10-handle stop, I should have been looking at that because the high was 15,239, call it 40. So you know how it does a poke out. But the S&P did the poke up, and then now it did the sell-off. I thought the Nasdaq would do that, but the Nasdaq didn't poke up past the high of the day because, I don't know, it also had to push through the 200-period moving average. Call it that. I'm a simple guy, simple moving average. So I got 50, 100, and 200.
Yeah, your 200 was your spot right there.
200 was the spot you're looking at, yeah.
Yeah.
And then you see the ES, flipping that, you can see that it poked out. It was already above the 200 in the ES, so we talked about it being stronger in the day. Look at it now. Where's the Nasdaq? Where's the S&P? We have a bit of a stronger S&P, weaker Nasdaq. Johnny, what stocks, big ones, big market cap ones are? Do you know any off the top of your head that are up big, showing weakness? Because you kind of got to. Sometimes you got to think, like, oh, Tesla, and these big ones do move. They're market weighted.
Market movers, Hewlett Packard, Etsy, and Newell Brands are the movers to the upside. VeriSign.
I don't know about Etsy.
Carnival Cruises and United Airlines are at the bottom.
Carnival Cruise, has it ever been on the top? I guess it has because it's such a low, such a low price stock that any big move. You see it in the morning before the market opens up. Biggest movers, it's up 15%. I'm like, yeah, it went from $5.20 to $5.40. Got it. There you go, Johnny. You want to take that?
Yeah, we just got word from Jack that they're rebalancing the Nasdaq. They're going to change the weighting of the top 7 stocks in the Nasdaq. I was not aware of that, Jack. Thank you.
Yeah, Jack, that's awesome, and that's great to know because we've all been talking. Well, the market's been always talking about these heavily market. I mean, you got the 3 trillion market cap. I don't even know what Google is, Apple is. I know they passed the 3 trillion a couple weeks ago. All right, still looking at this one. Nasdaq showed weakness, of course, more than the S&P. We always got to be thinking leaders and laggers. Who's leading? Well, Nasdaq so far is leading to the downside. S&P gave it a good college try on the upside. The little head fake.
Yeah, it did. I think it was a good college try, right?
Freshman year college try.
Yeah. Well, we
You gotta-
closed
you
the
gotta-
gap. We
What's
closed
that?
the gap in the S&Ps, but so far no real sign of acceptance. I'm looking for
Did you see where it bounced off, John? S&P?
well, yeah, just on profile, I haven't seen really. Well, yeah, settlement, right? There you go.
Yep. There we go, guys. We talked about
Yep.
settlement earlier. One of them was already hitting it earlier, Nasdaq, and now the S&P came down to it, bounced off of it. What was the settlement play again about the inventory, or what do you call it, John?
Overnight inventory. So the weaker hands overnight traders were holding longs. They didn't get what they were looking for to the upside, so they bail, and they typically take it back to either settlement or where the overnight started, which was basically settlement.
Yeah. The settlement play. That's a strategy we all should be thinking about. If it's opens, what is it, John? The settlement play. How would you describe it exactly? The whole if it opens outside of X.
Yeah, I mean that's basically it. You're taking advantage of probably some of your direct competitors or your direct time frame traders, because we see price moving higher all night long. It's shorter, weaker hands, pea shooters like us.
Yeah.
It's not longer time frame traders doing that. So when the market opens up, if they don't get what they're looking for, which is continuation, all of a sudden they'll all turn tail and head the other direction. And that's when you get your inventory adjustment, which brings price generally back to either settlement or where the market opened at 5 o'clock last night. So you get a market that's not very directional. There's no new news. The market opens away from where it opened last night or settlement, and we don't see new business coming in continuing to pay those shorter time frame traders. Then you're going to see them eventually. They'll turn tail and run the other direction. I like the way Jim Dalton calls it. He says, the overnight inventory is like being at a party, and it's a really good party and everybody's having fun because price continues to move higher. But everybody's aware at this party that there could be a fire. So they all hang around the door. Well, it doesn't even take a fire or somebody to yell fire. If somebody runs towards the door, everybody tries to pile out. And that's when you kind of get those strong inventory adjustments when the shorter time frame traders are all long. They don't get what they're looking for. They start to turn tail, and as soon as it goes fast.
All right, so,
exactly what happened.
Yeah, and we got Nasdaq keeps wanting to go lower. S&P's trying to hold its ground. It's above settlement, still trying to hold its ground. You got 49 evens, 44, 49 evens, and we're bidding it up in the S&P. Nasdaq's just did a sell-off. You're going to either say, well, is the Nasdaq going to pull the S&P, or is the S&P showing strength going to pull the Nasdaq up?
Well, and there's one other thing that I want to point out. This number down here, minus 3,800, is right here.
Let me see. Okay.
That's the delta. There's 3,800 more contracts have traded on the bid than on the offer. That's indicating that the short time frame traders are aggressively using market orders to sell. Price should, by all rights, be moving lower, and in a way, it is somewhat congruent with that. But it seems to be having trouble continuing to the downside as Delta continues to increase in negativity. So what that means, and it's really early to make any assumption about this, is it's possible that we've got longer, stronger buyers placing bids and just soaking up whatever the short time frame traders will sell them, using ICE orders to have an accumulation or a liquidation, whichever it is, If they end up getting the short time frame traders too short, then the opposite is going to happen of what the overnight inventory says, of what the overnight inventory did. We're going to end up with our direct competitors, the shorter time frame traders, too short, and they may be the ones that run it up later on in the day. So it's all a push pull. It's pitting time frame against time frame.
Now, if you're listening to this right now and you're like, hey, what? Like that's a lot of like mumbo jumbo, but it all makes sense. You just got to keep processing. All the participants in this are moving price. We're playing the game of price discovery. They are, and we are, and auction process and all that kind of great stuff. And John kind of explained that as well. You don't have to figure it out overnight.
No,
this took me a while too.
Keep coming to prep. Keep coming to make Hoag Money. Keep coming to the coming Topstep TV, because all of this information does take time to kind of absorb, and the longer you stick around, the more you're going to pick up, and hopefully the more your knowledge is going to help you get to where we want you to go and you want to go, and that is success. That is our goal here, is your success.
All right, so we got the S&P staying strong. Nasdaq tried to make new lows. Nothing yet. So Hoag talked about Topstep TV. I'm on here right now, and you're looking at the screen right now, because this is going to be a form of Topstep TV. This is all going to get changed up and better design and whatnot. You're looking at the scrollers on the bottom, crawlers, whatever you want to call it. Take a look at the. And there's going to be Topstep's unique differentiator, folks. The bottom where it says average entry, short bias, long bias, Topstep sediment, right down there. That's your trades and my trades inform all of our trades. So when we're all in trades, call it the S&P right there, average entry. NQ, average entry, short bias, long bias. You can see that 61% of folks are getting long right about now. It's 5-minute delay. This is pretty helpful. Why is it helpful? Because in the trading pits, you would understand what the bias would be, because you'd see the traders. And we're trying to give a picture of what the traders in our community are thinking. Doesn't mean you fade them or go with them, or it does. It's all up to you. It's information. It's just an indicator that helps you. We're going to have a cool name for it. We're going to have more around this. And this is going to be something Topstep does that nobody else does, that helps all of us, whether we're being evaluated in our one-step trading combine, or whether you're at the funded level. You'll be able to have this, and maybe it helps you. Maybe you don't even need it. It's just Topstep's way of providing an indicator, a helpful perspective or look at what the entire community is doing. In the end, you have to figure out what you're doing. So
I like it.
I like it too. And I got looking at it, the bias is starting to get a little bit more long. And I'm saying, you see long, S&P, 40, 44, 49, 84. You got longs, 52s, 47. Watch this, folks. Watch this. Very important data. Just that one right there. It's going to be on a different, it's not going to be scrolling. It's probably going to be at the top. We're testing out Topstep TV, so bear with us on all this stuff. You guys are getting a little beta here. And then we're going to have some music playing. Jack, we still got that going? I can't hear it, but okay. Okay, cool. Well, I won't be able to hear it then.
The music? No, we can't.
What kind of music we got going on? I'm missing it.
I know, right? Hey, I like ABBA.
All right, so I am still waiting.
Says the music's perfect.
Okay, sound and everything. Thumbs up, thumbs down. Everybody's feedback is helpful, because we're all here. This is going to be tradertainment. And what's really cool about Topstep TV, it launches at the end of this month. When it all comes together, you're going to have graphics coming in as you segue in and out of sessions. We're going to make it engaging. We're going to make it about traders, for traders. We're going to hear stats about traders. We're going to hear leaderboards, see leaderboards. We're going to have the data here on sediment right in front of us. We're going to talk about the sediment.
Trading Research is asking, will the sentiment be in real time at some point?
It will not be available real time unless you're interested in it real time, and that's something you'll have to contact us about.
We're getting some people saying the music is perfect level. Some like it. Some say no to it. They want to hear us.
Well, you should definitely be hearing us over the music. The music should be in the distant background. I always have a little bit of music playing, but I don't right now because I'm on here. We're making new lows. Still above settlement. Look at the S&P holding.
Yes.
44, 48 even. We're just talking about that.
Yep.
But here's what I always learn. When you knock on the wall enough times, the floor falls out, or the wall falls out, or the ceiling breaks out.
We're getting negative 6,000 in Delta now, and we're still kind of holding here.
Short bias is getting stronger on, we're calling it the tilt. The settlement is going to be called the tilt. You guys will see all about it. The tilt, why? Because we get long, we get short, and you get the tilt. Also, traders are going on tilt. They're on motions, and then you got emotions getting involved. Markets are made up of emotions. People think it's cheap. People think it's expensive, and they're trading off of it. And I just lost my camera thing in the back that holds the camera. Alrighty, am I okay? Okay.
Capital, we all do that. We all have days like that. It's good to take a little time off after something like that.
What's that? The love hate.
He said he was on tilt on Friday, so he's taking a little time off.
Yeah, I had my worst day when I was traveling. I just got back from Vietnam and Indonesia. What the hell was I doing trading there? I put the kids to bed, and it was at 8 o'clock at night, 12 hours difference. I'm like, I'm going to go open up my laptop, put a trade on. I haven't had that bad of a day in a long time.
I was wondering what you were doing.
Yeah, I know. You guys probably saw it. We can see each other trade, everybody, so this is all great. We hold each other accountable. John and I are on here. We're trading buddies. We've been trading buddies for a long time. Everybody at Topstep that trades, and there's a lot of traders here, I think more than any other prop firm funding opportunity that's out there that trades. We started the industry because we trade. Back behind me. Right there. No.
The Merc.
Right there. Right there is the CME. Right there. Chicago Board of Trades over there. We're in our...
I can look up those windows that used to be the trading floor, and I can almost see where I used to stand.
The ghost of Hoagland.
The ghost, yes.
Look at S&P staying strong. This is telling us something today. Now the question is, can it pull up the Nasdaq? The Nasdaq's low has not made new lows from overnight, just so everybody knows. The Nasdaq low is 41.5. 15,141.5. 15,141.5. So I think about 41.5, even though it shows up on your ladder. I have a ladder up, pretty much what John has screen wise. Just have that one short. That was a great entry, and I got 17 handles out of it. And anybody would probably be like, newbie would say, "Oh, you missed a big move." Well, it's in the morning, 30 minutes in the morning. I already am up 340. Not even an hour into the day. Do you make 340 an hour? I mean, I wish I did, and that's kind of what we're thinking right now. I'm actually in my lawyer's conference room right now, and I know he makes more than 340 an hour.
I snuck in a long down there at 44.48 while we were gabbing.
I kind of like this because it's kind of pushing through the 200 moving average on the S&P 30-minute.
Yeah.
Nasdaq's thinking it's in the like bee's knees, so to speak. It's like S&P's showing up to the sell-off party.
Dustin, 44.48.
44.48 even?
Yes.
Great hit. That's what we were talking about. Great entry, John. You snuck that one.
Not bad. Not bad.
You got a couple handles into it. You got a cushion, right?
A little bit.
Yeah.
That can go flying anytime. Dustin, I got to say hi to Dustin. Dustin's somebody I knew on the Merck trading floor, and yes, Tech has us a long way from the floor.
Yeah, right. I know.
Good to see you, Dustin.
Yeah, Dustin.
You met him. He's been at a couple of our meetups.
Yeah. I was just gonna say.
Mm-hmm.
What was his acronym? Oh, Dustin. Yes, I remember. Dustin, sorry about that. Yes, I'm thinking about all the folks on the floor, which is kind of hard now because you see some of them and you kind of like, you know them by their badge too. But Dustin,
Yes, right.
we've met many times. And we're buddies. I remember. I think you still have your phone number.
Yeah, I was. He was
It's
at
been a while.
Disney World with my family, and so all of a sudden I hear somebody yell "Hoag," and it's somebody I know from the floor. But I got to introduce him to my wife, and I only remember his badge.
Yeah.
I tend to be bad at that.
All right, so your 48 evens are right here, right now. Okay, it's knocking on the door on the downside. When I say knocking on the door, hitting on the downside in the S&P.
Yeah.
You got your tilt. The tilt, long bias is stronger. I got real time in front of me. You guys will see a 5-minute delay if you want real time.
Yes.
Topstep can talk to you out of their data center. 48 evens right here. Bias is only 50% long, so it's not like we got a big.
All these sellers are really aggressive. There's nobody in front of them. We're going to get hit.
Okay. Short bias now 50%. It is 50-50 right down here.
Yeah. I shouldn't even be in.
I mean, you got two ticks heat.
Yeah.
You're fine.
On a micro.
Hurry up and wait. Welcome to the business of trading. We watch the
Right.
paint dry.
Right.
The paint dry. Good traders watch the paint dry.
How long are you in Chicago?
I leave Sunday. Got the whole crew here, 3 kids and the wife.
Yeah, well, you guys, I mean, you're both Chicago people. You got to come visit the old home turf once in a while, huh?
Yeah, I've been here 20 years. I moved here in 2002. Started trading in 1997. Blew out of 3 $30,000 trading accounts. Graduated from college. Had to sell my vending company to pay for my last $30,000 trading account because I had it on a HELOC. Or not a HELOC, an LLC, line of credit. Paid that off. Was completely broke again. And moved to Chicago. Went down to the Chicago Board of Trade on the 14th floor. Interviewed for a prop job. We're making new lows. Coming right down here. There it is. It's just 50-50. No lean. No tilt. You got the 30-minute S&P coming back down to settlement. You got the Nasdaq making new lows, but it's not making new lows. Making daytime session lows, but like we got a long ways to go if you want to make overnight lows. It's 62 at the orders. 62.75. That's a ways away. 100 handles, ladies and gentlemen. If you would have been a perfect trader and sold it up there, came down here, how many people beat themselves up and say, I should have done that? Woulda, coulda, shoulda. How much money? What do they say if I had a nickel for every time? All right, so we got 100 handles that I would have the short end, but that's just helping me think about the position that I would have not held it for 100 handles. You think like S&P was strong out of the gate, Nasdaq was getting pulled up by it. Yesterday, the S&P pulled the Nasdaq up, and today Nasdaq is dragging the S&P down. So we just poked ourselves through settlement. I'm looking for a long position because, John, you always talk about the markets when they get exaggerated.
Yep.
And you also remember this could be a sideways day. Everybody tries to play, oh, it's going to keep going, keep going. Don't worry, I've thought that as well, and I may be thinking that every now and then as well. But you got to put yourself in check. There's a lot of sideways days. Sideways. And right now, if you look at the 30-minute, now if you're in the 1 minute, if you're in the 5 minute, if you're in the 10-minute, you're going to see a lot of noise, which is fine if that's your trading style. I'm not telling everybody has to find their own trading style, but 30-minute right now hasn't made new lows. It's getting to the bottom of the 30-minute range. If you talk about all the way till the open that opened 5 o'clock yesterday, Chicago time. S&P has a 100-period moving average right below the settlement. I like 50s, 100s, and 200-period moving average. I always was taught the 50 is a speed bump, the 100 is a chain link fence that can go through it, and the 200 is like the Great Wall of China.
A brick.
Great Wall of China. Yeah. Of course, it always goes through these things. It's about playing the range, the issues. Remember we talked about the issues?
Yes. It's this area-ish.
Yeah.
It's longish, shortish.
Yeah. Uh-huh. And if you nailed it, go buy a lottery ticket that day. Get that.
Yeah,
number.
right?
Yeah. All right, pushing through settlement. Pushing lower. S&Ps now breaking through settlement, now below settlement. And you have the 100-period moving average getting down here. The tilt is still 60-40, 50-50-ish. No lean there.
Simple.
Trader. Yeah. bulls and bears, or longs and short biases are lining up. I do like it. The long position somewhere around here. It just seems like.
So now we've got the opposite position, opposite possibility from yesterday. We opened out a range. Hang on, this is the wrong.
Yeah, let me look at you real quick. Tell me some profile stuff.
Okay, so yesterday we opened out a range in balance. We came back in and accepted balance or the value area from Friday. We didn't get to the value area high. Today we've opened out with a gap. We traded higher, we traded lower. Now we are at risk of another value area special situation play. Price has to accept inside value from yesterday to push price all the way down to the other extreme of value, which puts us down to 44.32. But it seems to be having a little bit of trouble at value high here. We know we've got some pretty negative delta, which has been congruent with direction. So I'm going to take one last probably ill-fated trade here because we stopped at value high and look for a potential long. Which would be strike 3, which would take me out. Then I'm done.
The three strikes, take 15 is what I like to call it. Mm-hmm. And then take 15, you come back. Is there anything there? Remember, window of opportunity starts to close unless it's real big volatility day.
Yeah. Typically, if I have 3 straight losses, then something's wrong. I'm not seeing things right.
Yeah. Take a break or call it a day. Remember, we're traders. Not trading is being a trader. Or knowing not what to trade, I should say. Right at settlement, S&P. We tried to go all the way down, and it came close to the 100-period moving average. They tried to go lower. It was tried to trade under the settlement. Nasdaq's been under settlement the whole time.
Jeez. That Nasdaq's been killing me. Look at this thing.
All right, I'm up 340 for the day. It's not even an hour in the day. It's still 40 minutes. Patience. I got about another 15 minutes to go, 20 minutes to go before I have to hop and start my day. But this is not how it's going to be when we start Topstep TV. I'll be on more. We'll have more partners drop in.
Mm-hmm.
We'll have more funded traders drop in. It's going to be what's up? Or it's going to be and then we'll have more stat guys dropping in with stats. We'll have top quizzes. Call it pop quizzes, but top quizzes. We're going to have leaderboard updates.
And lots of stuff we're gonna give away.
Yeah, we're gonna have our cool risk managers jumping in, talking about certain folks up money, and then they won't name the folks that were up money that maybe ended up hitting their daily loss limit, which means you're just deactivated for the day. You don't lose your funded account. It is a circuit breaker. We should all have a circuit breaker.
Yep.
Anybody who says they never traded with a daily loss limit, I'll say, have you ever made money consistently? And I'll probably hear the answer is no.
And it doesn't even have to be a dollar number. For me, it's 3 straight losses. I don't have to lose a lot. Just 3 straight losses. That's it. Something's not right. Take a little break. Look at something maybe later on, and we'll see what happens. Jackalope Hunter, nice job today. Up 900. Call it a day.
There you go.
It's good to see you again, Jackalope.
Jackalope, I like hearing that. Because your 900 shouldn't get me to be like, oh, I got to trade. I got to make more than 900. But when you're new to trading, I see a lot of people go, man, he made a 900. I got to hurry up. No, you don't. No, you don't. You could be reading the market better than I did, and clearly you have been. Or your trading style has been fitting this move a little bit better than my hand. I'm a little more sniper-like, which doesn't mean maybe you are too. Sorry, I didn't mean it like that. S&P coming down to the 100-period moving average. Nasdaq still has not found a bid that you can hang your hat on. The tilt, the bias, no bias, 53% to 46%. I'd say that's indecisive or not heavy one direction. Why do we call it the tilt? Because you get one heavy, you get another heavy. What does it do? Sometimes the whole heavy herd pushes the market, or the market goes with them. Sometimes it does not go with them. We're going to learn all about that, because this indicator nobody else has shares or has ever explained, and we're going to explain that. Why? Because we have a ton of trader data, and we're going to help everybody learn from other traders. Our trades, my trades, your trades, inform all of our trades. So this is a special thing that we're going to bring to you all, as well as partners with their different styles, as well as funded traders. I hope you guys are going to get excited.
I hope so too. I think it's going to be a lot of fun. You know, trading is a lonely business, and we're going to keep you company.
We're going to keep you company. Nasdaq making new low, coming down close to the lows. Bottom pickers, be careful. Be careful. Be careful.
Nasdaq is just getting smoked.
S&P still hanging around settlement. No big bias in the tilt. I have a 10. I don't have a position on, but I have a 10 handle stop. So right now you have to be really good with your entries. Like, hey, Michael, just double it, open it up. Because no, it doesn't work for me. I don't like to open it up, but I like to be very patient and let the market come to me.
Mm-hmm. Yes, that's almost always a good idea. Something I say a lot. Don't go looking for trades. You'll find them. I found a couple today.
Oh, yeah. What do they say? The charts are traders' astrology? No. Astronomy? Astrology?
The star charts.
Star charts?
Well, apparently for me today, Mercury is in retrograde.
Yeah, I mean, you can put, that's a cheetah. I mean, you've got to be careful. So don't hang your hat on anything being for sure. We work in the issues.
Mm-hmm.
You know, setting up for a bull flag.
Probabilities,
exactly. If it sets up like a bull flag, that does not mean it's going to always trade out like a bull flag would trade out. vice versa, head and shoulders and all that kind of stuff. You can find a head and shoulders on any time frame if you want.
Yes. Yeah, it's all about the context, right? And talking about head and shoulders, that's a reversal pattern. If price doesn't go up to a head and shoulders, it's not a head and shoulders,
Right?
All right, so I'm sitting here long again here at 44 half. I got to stop below the overnight low. And what's our target going to be on this?
Well, if you're looking at the 30-minute, the high of the 30-minute bar is 52 even. The low of the 30-minute bar is 42.
No, we're going to be more aggressive than that. I'm thinking the value area high from Friday, which is 44.60. Which is just above our high for the day.
I mean, the 30-minute bar, what was the other 30-minute bar? The last 30-minute bar that we're in, well, the one we're in right now is a 10 handle. It's 10 handle range. The one before that is a 14 handle range. So you're looking for 10 handles. Prior 30-minute, 14 handles. This 30-minute, 10
handles. I'm looking for 20 handles.
I thought you said 58. My bad.
60. 44.60 is our target. Got it. We have to take out the overnight high, or the regular trading hour session high, because that's value high from Friday, which was the target for the breakout for the value area special situation play yesterday, which was 62. So we're short of that. And I could be whistling in the wind here, but I'm willing to take the risk, and we'll see what happens at the end of the day.
Hey, if you're talking out the trade of me, Johnny, then I'm learning a bit more. We all make our own decisions. It's the information that's good to have.
Wish somebody on some days would make the decisions for me, but that's just the way it goes.
I wish some days the decisions I made were the opposite.
We don't do anything.
There was a time in my cold streak in the early days. You get so frustrated. I'm like, F it. This Friday, I come in on Friday after a bad week. I'm like, I am playing the opposite. Whatever. I want to get long, I'm going to get short. I'm going to see what happens. I kept it really tight. Really tight.
Yeah.
I wanted to mess with my psyche. I'm a big, because you have the conversation inside. This is setting up to do that. When you got a cold streak going, you're like, how do you get out of it? And that was my stupid way of thinking. It was bad. I wouldn't recommend that to anybody. But it was something I did, and I remember thinking, okay, I lost money. I lost money on this too. What's going on? Yeah, what do they say about 15, 50 half, or 50 even? I kind of like this as a short up here.
Well, you're up against VWAP and the S&Ps.
But I also see Nasdaq.
Nasdaq is well below VWAP.
Yeah.
Hmm.
54, 67. I'm going to have to cut out of here. Any feedback, please share it in the chat, folks.
Yes, please do.
Yeah, this sucked. This is great. Do this, do that. I would have liked to see this. Just so anybody, I like the shorts up here, the 60, 70 area, 15, 1, 60, 70, 75 range. I do, but I could be totally wrong. The bias, the tilt is getting heavier to long bias.
Somebody's saying hi.
Who's the somebody?
Lazy. Okay.
right, cool. Hey, everybody. I really enjoyed this. You're going to see more of this. We need feedback to get better. Just like traders, we need feedback. Hopefully, you saw Johnny and I talk like two trading buddies. He had different positions than I did. Just because you hear somebody else's position doesn't mean you have to trade like that. As traders, we got to find our own identity.
And as we learned, we didn't even have to swear.
We didn't even have to swear. And we're not going to swear at each other as a team play. I'm gonna sign off right now.
Hi, Michael.
Thanks for having me on. And
had a blast. All right. That was cool. So we've got a plan for this last trade here. We're just going to see what happens. We've got the long at 44, 44 half. We've got our stop below the overnight low. We've got a target at 44.60, which may or may not be aggressive enough. We'll have to see how this plays out. We'll talk about it. Maybe on a reflection today. I don't know. We'll see if we have time to do that. But, we are looking so forward to having the opportunity to spend more time with everyone and hopefully make a difference in your trading and help you get to those levels of success that you're looking for. And we really appreciate any and all feedback. You can send it to support. You can send it to me, Jay Hoagland at Topstep.com. And let us know what you think, what you like, what you don't like. And we're always trying to improve, and that's how we improve here. So have a great rest of the session. I will see you later on for, maybe a reflection, but I don't know. We'll have to see if we have time. But other than that, I'll see you tomorrow morning for the market. Pardon? Oh, okay. Well, I'm getting word there may not be a market prep tomorrow, so we will see what has to happen. I'll miss you. I know that. So again, let's take our deep breath. Stay humble, grateful, creative, and centered in your trading. If you're starting to tilt, you've got to know it. And have a great session. We'll see you soon.